Hey guys, just a quick reminder, there's just about 1 week left for the November special. If you want to get in on our Discord server, you can lock in a low price of $10 a month for the end of time. If you get in this month, you can see we only have 6 spots remaining. We had opened up 2 spots and they have all sold out. Actually, this spot sold out within the first week, so I was requested to open up some more slots, which I did. So get in there while it's still hot. Like I said, only 6 spots remaining. Now's your time to get in. Hey guys, how's it going? Solo back with another weekend update video. And today I want to talk about the market overall. I want to talk about the S&P 500. So we'll do some updated technical analysis on the SPY. And then I also want to show you some market data to help you make your own opinion about whether you think we are going to crash soon or have a little bit of a pullback, or are we going to keep rising in the month of December like the S&P historically does. So let's get right into it. Just taking a look at the heat map here. This is from 2 days ago, from the last trading day on Friday, just to remind you how that day went. And you can see pretty much red on the board, right? Big tech was kind of flat to down 1%, but overall a lot of red. And let's take a look at the trading view chart already on the SPY SP 500 ETF. And you can see on Friday we were down 0.7%, so SPY had a little bit of a pullback. This is the daily chart, so each candle represents 1 day of trading. And I just want to give you an overall view of what the SPY has done so far this year. Obviously, early in the year, February, March, we had a big pullback because of the illness. And then we had a very big recovery because of the Fed printing money, fiscal policy, monetary policy. We had what looks like a strong economic recovery. I'll show you some data later on in the video, and you can decide for yourself if you really believe that the economy has recovered or not and what you think the market is going to do right now. But as you can see, I drew this long-term trend line over the past few months. And if I zoom in here, back on September, we had another market pullback. Obviously not as much as earlier in the year, but we did break through this parallel channel, break through this green trend line, and we had a little bit of a sell-off up until the end of September. And then the last week of September until October, the market rallied again. And you can see I drew another trend line at that time. But then unfortunately, in the middle of October, again, we broke that trend line. And from about October 16th to October 30th, for the last half of that month, we again had a pullback in the market. And then basically in the beginning of November up until about November 17th, just last week, we had another short-term rally. However, I will draw your attention to, look what happened basically towards the end of last week. The last 3 trading days, we started again to break below this trend line. We had a pretty significantly red day on November 18th, a little bit of a rally back on the 19th, and then, as I said, another pullback to close out the week on Friday. So I did draw updated Fibonacci retracement levels from the most recent low back on October 30th, which was an intraday low of about 322 and some change, to the most recent high, which was on November 9th, intraday high of about 364 and some change. So the one thing I want to look at is, are these Fibonacci levels holding up for now? And I think they are, because if I zoom in here and I look at the past 3 days of trading, you can see the 23.6% Fibonacci level is right at about just shy of $355, about mid 354. And you can see the intraday low on November 19th went below that, but we didn't close below that. And then also Friday, we did not break that point. We got awfully close. And take a look at this wick right here on November 13th. The intraday low was right there. This wick also on November 11th was right there. This candle on November 9th was right there. So I do think right now 355, or I should say a little bit less than 355, about 354 and some change, is going to act as support. The other thing I've noticed is if I zoom out here, my last area of support that I've drawn is about 350 and some change. I don't have any other areas of support above that because we're basically at all-time highs. And as you can see, there's really not a lot of price data above 350. There's about 2 weeks worth of trading, mostly here in early November, and about a day or two in early September. But looking at the candles here, I think I can draw one more area of what I think is resistance right now, and that's going to be right about here. So at about 357, just shy of 358, and I draw that because take a look at this. The top of the candle here back on September 2nd, we closed right there. If I zoom in to the more recent days of trading, check out these candles. 1, 2, these 3 candles all pretty much topped out also at about high 357, 358. So I think that is an area of resistance right now, and that's right where we bounced off of, or at least I should say where we opened on Friday and closed below it. So right now, the price action I'm looking at is, I want to see, do we hold this basement of about 354 and some change, or do we hold this ceiling of about 357 and some change? That's going to determine for me, are we going to keep setting all-time highs if we can stay and close above 358? Or are we going to continue this sell-off and now test the other support level at all the way down to about 350 and some change? So we do have, if we do sell off, about $5 worth to sell off, which is going to be about 1% or so of the S&P 500. The other thing is, take a look at the RSI. We were relatively overbought back on November 16th. Then you can see we did sell off. So the RSI is still close to the overbought side, but it is closer to the middle than it was before. If I had to bet, I would bet to the downside. I think we are going to pull closer to the 21 and the 50-day moving averages. As we can see, the SPY trades pretty closely to the 21-day moving average. When it gets pretty far away, it tends to correct itself. And it does look like we've gotten pretty far away from the 21-day MA so far. So I wouldn't be surprised if we have a little bit of a pullback, if not all the way back to 350, but a little bit of a pullback maybe below 354, 355. We'll just have to wait and see. Now, let's take a look at some of the market data that I've seen so far, and then you can decide and leave me a comment below whether you think the market is going to pull back or just continue and rally to the moon in the month of December. So first of all, I just want to give a shout out to this website. This is themarketear.com. They have a lot of data and they are updating, hourly. Even on the weekends, you can see the most recent update was about an hour ago on Sunday morning. So this is a website that I like to look at data. I'm a total nerd and geek when it comes to data. So this is the stuff that I like to look at and find interesting. So let's get right into it. And let me show you some of the data points that I saw that I was really intrigued by. So the one unrelated data point that I found interesting was, take a look at this chart here. So this is the comparison of Tesla to the other companies in the S&P 500 if Tesla were to be added today. And take a look at this. Forget the comparisons for Tesla to other automakers. If Tesla was added to the S&P 500 today, it would be the 8th largest company in the S&P 500 based on market cap, which is just craziness. Take a look at this. Tesla has a 497% year-to-date return. Is this valuation fair? I don't know. Let me know if you agree or disagree in the comments below, but I think this is just personally a crazy high valuation for Tesla right now. Take a look at this company. Apple, Microsoft, Amazon, Alphabet, Facebook, Berkshire, Johnson & Johnson. All of these companies have been around much, much longer than Tesla, and I believe have a much larger business case than Tesla does. But, what are you going to do? We'll have to watch and see how this story unfolds. So take a look at this graph. I really like this one. I found it a few days ago on November 21st, but I waited till today to share it with you because I wanted to make a whole video about the market. And this chart here, or this graph I should say, is tracking the sentiment. So right now, sentiment has basically peaked, because take a look at this graph here. So what this is doing is tracking stock positions across retail, institutional, and foreign investors for the past 12 months. So numbers above this dotted line at 1.0 and numbers below this dotted line at basically negative 1.0 are extreme positions, okay? So take a look at this. We are currently at 1.9. That means we are extremely bullish in our sentiment right now. Take a look at the last time we were this bullish was around September of 2019 and December of 2019. So the theory is that we are so extremely positioned that something has to give right now. Take a look at it. Once we were this high in the past, we have had a decrease in sentiment every single time. So is that what we're going to see leading into December and maybe early next year? I don't know. So this article seems to state that we may have consolidation for a couple of weeks. So that would go in line with some of the technical analysis that I showed you earlier, suggesting we might have a little bit of a pullback like we had back in September 2019, December 2019, and earlier this year, but that was basically for illness reasons, of course. Have to see what happens. This is a graph I just wanted to show you because I thought it was a little bit funny. So this graph is showing you the Federal Reserve balance sheet, and it's funny because the article says, in other news, Fed BS new all-time high. I know they meant balance sheet, but BS can also be a synonym for something else, if you catch my drift. Take a look at these graphs here. So unfortunately, these graphs are showing the number of daily tests, the number of daily cases, the number of patients currently hospitalized, and the number of daily passes of patients with the illness. And take a look at this. I mean, we're basically hitting all-time highs in the first three categories. Thankfully, the number of passes has gone down compared to earlier in the year, but it just looks like right now there's no end in sight. So how will this impact the market? You know, I am a little bit nervous. Here's another interesting graph I saw, and it says right now, I'm going to make this larger, but the put-call ratio is very low right now. And the last time people were against puts right now, the market decided to go lower. So right now, we haven't been this low since around mid-October, then before that around mid-September. I'll have to wait and see, but as this article says, maybe nothing, but the last time this happened, the market decided turning lower. All right, I'm going to show you one more doom and gloom graph, and then I'm going to end the video on a positive note. So take a look at this chart here. So this is showing the S&P 500 earnings growth by quarter, and actually this is for quarter 3 of 2020, and take a look at this. Mostly negative, right? So we had a rough quarter in quarter 3 again. Now, if you know, the definition of a depression is or I should say one of the definitions of a depression is a minus 10% GDP growth, or I should say a 10% loss in GDP year over year. I'm going to be very curious to see if this January, when the yearly GDP numbers come out for 2020, if it is less than 10% from 2019, then we will, by definition, be in a depression. And looking at the numbers, obviously quarter 2 of 2020 was very bad. Quarter 3 also looking pretty bad as well, but just not as bad as quarter 2. Going to be very interesting to see how we close out quarter 4. And like I said, what the yearly year-over-year GDP numbers are for 2020 compared to 2019. Now, as promised, let's take a look at a positive graph that may give us a little bit of hope for all you bulls out there. So this graph is showing you the S&P 500's average performance over the past 60 to 70 years, almost 70 years, 1950 to 2019. And you can see the month of December, we rally hard on average historically on the S&P 500. So if history is going to repeat itself, then we should have a very bullish market closing out the year. So do you think this is the year that we break this norm, or should we believe 70 years of average performance and stonks only go up? Hope you like this video. Let me know in the comments below if you like news and data-driven videos like this. If you have any questions or comments, leave them below. Like I said earlier in the video, make sure you get in the Discord server now to lock in your price. If you agree or disagree, let me know. I'm always up for a discussion. And as always, happy trading.